In North America, advertised prices for 3-star hotels are up nearly 4% for the back half of 2026, while 5-star prices are down more than 20%. Same country, same months, and a 24-point gap. That single stat says a lot about the American traveler in 2026, and it's just one finding from Lighthouse's just-released pricing report, the State of Global Hospitality Pricing, H1 2026 recap, and H2 2026 outlook. Today on Lighthouse Quick Takes, I am going to hit the highlights of this very report. But before we start, I just want to say that no matter how you are watching this video, I will include a link either in the comments or the description of the video so you could follow along or download the report for free to read in your own time. And with all that said, let's start with our regional view. And here is the year-over-year change in actualized hotel pricing by region for the first half of 2026. Europe leads the world again at 6.2% growth, and that's the third consecutive half year that Europe has sat atop this chart, following 10.4% growth in the back half of 2025. Latin America and Africa also posted reasonably solid growth, and Asia, this is a big one, Asia is finally back in positive territory at 1.8% growth after years of declining year-over-year pricing. The outlier in all this at the bottom is North America, down 8.9% year-over-year in H1. But look what happens when we flip to advertised prices for H2. North America swings back to positive territory at 0.9% positive growth, and Latin America jumps out to 8.6% growth. As for the growth in North America, the World Cup bounce may have landed in the second half of the year, helping to prop up a market that's otherwise been pretty unsettled. One of the biggest themes running through this entire report is consumers hunting for value, and you can see it in the star rating data. This is year-over-year change in H2 advertised hotel pricing by star rating, and the North America columns are the story. 3-star hotels up 3.7%, 4-star down 7.2%, 5-star down 20.5%. That is a 24-point gap between 3-star and 5-star pricing in the same region. Travelers are trading down, and the top of the market is feeling it first. And we see a similar pattern showing up in branded versus independent. Independent hotels, which have lagged branded properties on pricing power in recent years, are now outperforming brands in advertised H2 price growth in 4 of our 7 global regions. After years of aggressive brand pricing, the pendulum may be starting to swing back. Now, to my favorite chart in the whole report, the top 20 destinations for H1 hotel pricing growth. The top 5 destinations in the entire world are all in Vietnam, all 5. Phu Quoc at 153%, Da Nang at 99%, then Nha Trang, Hanoi, and Ho Chi Minh City, all of which exceeded 55% growth. Vietnam as a country grew 36% in H1, and it's still in the global top 20 countries for advertised pricing growth in H2. This is what happens when word gets out about a value destination. Beyond Vietnam, 2 patterns jump out, okay? Island getaways, the Bahamas, Barbados, Bermuda, Fiji, St. Lucia, they feature heavily in the top 20 lists. And Eastern Europe is having a moment. Albania, Bulgaria, Croatia, Montenegro, Slovenia all make appearances as travelers push further afield for affordability. And on the short-term rental side, look at the Polish cities on this H1 growth list, which features cities like Gdansk, Krakow, Katowice. It's the same value-seeking behavior, just a different accommodation type. Now, the other end of the spectrum with the countries with the largest year-over-year declines in advertised hotel pricing for H2. The Gulf has, of course, been hit hard by conflict in the region. The UAE leads all countries with a 48.1% decline in H2 advertised pricing, and Bahrain, Oman, Qatar, and Saudi Arabia all appear in the bottom 20 lists too. Dubai illustrates the scale of the shift. A year ago, hotels were advertising H1 2026 prices nearly 50% above 2025. The actualized H1 result ended up as an average decline of 21.6%. And I think the surprise entry on this chart is Japan, down 21.4% in H2. And if you dive deep into the data, we see that 6 Japanese destinations sit in the bottom 20 for H2, with Osaka down nearly 40%, a drop in Chinese visitors, a weak yen, softening domestic spending, and price corrections from Osaka Expo 2025 have certainly cooled Osaka pricing quite a bit. If there's one lesson in this report, it's this. Markets are flipping fast in both directions. Vietnam went from declining prices to 36% growth. Dubai went from plus 50 to minus 21, and pricing off of last year's calendar could be how you end up on the wrong side of one of these charts. The full report has all the details, all the top 20 and bottom 20 lists, the short-term rental data, and specific recommendations for how hoteliers and operators should respond heading into H2. Like I said up top, I will include a link either in the comments or the description of the video so you can download the report. It's free, and I assure you, it's genuinely a fun read, which is not a sentence you hear associated with pricing reports very often. Ladies and gentlemen, thank you for spending a few minutes with me today. My name is Blake Ryder, and we will be back next week, as always, with another Lighthouse Quick Take.